The broadcast
Hi,
is now
everyone. Welcome to
starting.
the
All attendees are in
Ablesys
listen-only
webinar.
mode.
Ron here, and I'll be glad to go over the charts and answer your questions, and we'll look for the buys and sells on the charts. In other words, what you should be looking for on the charts. We always combine two time frames into one chart. That's what makes it work so well and gives us such a big advantage over everyone else, because unless the two time frames agree, usually means the market's going to be choppy. So we kind of get an alert. That would kind of give us, a heads up before the markets get choppy, and that's a really big advantage, because nobody can win in a choppy market. So that's really been helpful, and we have a couple different ways you can trade. I mean, you don't have to fit into Abletrend style. Abletrend will fit your style. If you like the day trade, if you like the scalp, which is in and out really quickly, or you like the kind of trend trade, this week's been really good for the trend trading, especially yesterday was great. Signals were really dead on. There was some nice big trends, and you don't know that. I mean, obviously nobody can control the market, but you get a nice trending day, boy, man, we just kill them. But even when it's sideways and a little bit choppy, that's okay. When the two time frames don't agree, we'll have a lot of no trade zones, meaning we won't be in the market that much when it's choppy, which is a good thing. Because if we were, or anybody is, you'd be losing. So it's really been working well and very helpful. And we're very helpful here. I mean, we use it ourselves, and certainly glad to help in every way. So let's jump in, and works just as well for stocks or for futures. Long-term swing trading, exactly the same. It doesn't favor anything. It's just as accurate for any type of trading, any market, and any type of trading. Some people just do the more longer term, and that's great. They don't want to be in front of their computer all day long, and that's perfectly fine. And you do more of a longer term stock trade or ETFs. You would do more options. You do more longer term. Software's going to nail it for that too. And I'll show you that right now. This is the Qs. I always like to look at the Qs because, that's pretty much what's moving in the market. The Qs and the small cap index has just been pretty fantastic. All the small cap stocks and the technology stocks, and, the Qs. And as I always say, we just want to wait for the colors to line up. We want to have a blue bar and a blue dot and a blue cross, and we want everything blue. A blue arrow, I should say. This is the weekly buy signals. You come in only once a week, but it's still good in between the week, and that's the key here. I mean, you've got these here for the last 8 weeks or so. We've been on a buy signal on the Qs. The dots are all the daily buy signals because they're blue. So that means there's support under the price. As you can see here, the dots tend to block the prices from going lower. If you missed the beginning of the trade, these are great places to get in. Okay, there's where the trend starts, but we didn't have the blue arrow underneath. So there is the perfect place to get in. The first blue bar, blue small dot, and a blue arrow, meaning you've got a weekly buy signal and you got a daily buy signal. But the key is to get in on the first time all three things agree. All the algorithms, all the time frames, they're all combining together, which greatly puts the odds in our favor. That really stacks the odds in our favor that's a great time to get in. Now, if you missed the beginning, you had another opportunity here a couple of weeks ago when the prices come back down and hit the blue dots. Those are perfect places to get in. That's not where you put your stop. That'd be the worst place to put your stop, because these blue dots, remember, blue is buy, red is sell. So when the prices hit the blue dots, that means buying is going to be coming in. That's what's called support. Buying is going to be coming in when it hits the blue dot. So if you missed the beginning, get in on the blue dots. Had a perfect opportunity yesterday morning. The prices sold off in the morning and went down to 303.5. On just one day now, it's up to 309. And 76 is where it closed today. You're not $6.50 in one day. It's a nice little trade right there. And again, if you did miss, you want to get in at the dots. If you missed the beginning, which was right here at 292 about a month ago, and we're still in the trade, unless the prices close under the second lower row of blue dots. See, here's the first row, right below the price. There's the second row. Unless they close under the second row, stay in the trade. You're safe. Stay in the trade. You're safe. Keep it simple. Less is more. I always say that. Less charts, less indicators, less things you're looking at, more profit. I promise you that. Less is more. Don't get confused with looking at too many time frames and too many indicators and too many algorithms. Just keep it simple. That's what really does work the best. Okay, now we can look at a little shorter term. This is more of a swing trade. Now, I don't like the first was a daily, weekly for longer term trading. Hey, this is for a swing trade. Maybe like a few weeks, a few days, or maybe a few weeks. You got a beautiful trade here on Square. Square's a really good one to trade. It moves a lot. Okay, this is about, each one of the black line is a day. It's 3 bars per day. It's a 130-minute daily combination. It's just for stocks, not futures, stocks only, stocks and ETFs. See, 3 bars today, 3 bars yesterday, 3 the day before, 3 bars per day, every 2 hours and 10 minutes. That's exactly 1/3 of the day. That's why we picked 130 minutes. So right over here, about 2 weeks ago, we had a really nice buy signal, very clear, very obvious. Triple confirmation, triple agreement. Blue bar, blue small dot, meaning it's a buy signal, and a blue arrow. And when those were arrow, the daily was on a buy signal for like months. So that's an easy one right there. And just stay in the trade. We're still in it from 214, 212, at 241. That was only 2 weeks ago, not a year ago, two weeks ago. Still in the trade. Just, pick the ones that move. Pick good movers, ETFs, that's my game. I love those. It's even lower risk. Stop would be right here right now. Well, actually, to be honest, I put the stop really a little under the arrows, as I've been saying. Why? Because the market's in such a powerful uptrend this year. So you say, well, when would I get out? Well, you're really only putting the stop there in case just something crazy happens. Don't exit the trade until it closes under the second row of blue dots. That's for the buy signals. Now, for sell signals, that's different. Then you got to keep a tighter stop. Because the market goes down like one day and it goes up like, every week it goes down basically one day and it goes up 4. That's the average. Sometimes even more than that. But with 4 days down, 1 day up, well, obviously the market's in the market goes up many more days than it goes down. And this is more for holding overnight. Overnight's usually when you get your big pop. That's really when you get a lot of big moves, on the opening gaps the next day. So you make a lot more money when you hold overnight. But that's not the day trader's game. Day traders got to be out by the end of the day. This is for swing trading stocks or ETFs. This is a 130-minute daily combination. And as you can see here, this is a powerful move. But until it closes under 228, I'd just stay in the trade. Because, every time it hits the blue dots, it tends to bounce off and go higher. Good stuff right here. And you can see it in the trade prior to that. There's your blue bars, your blue dot, your blue arrows. Everything is saying it's going to go higher. And right here, it actually closes right just a tick under the second lower row of blue dots. So we're out over here at 205. We got in at 195. We're only in it for about a week and a half. You got an option, call option on that one, and you hit a home run. So there's big money on these charts if you're disciplined to just do what it says. Because your feelings or emotions, or my feelings or emotions, or other indicators can't even come close to comparing to these algorithms that are working so well all these years. You just have to have the discipline to do it. That's the hard part for some people. Okay, this is more of a trend trading intraday chart. We like the mini NASDAQ because it moves. It moves a lot. But some brokers like TD Ameritrade have a high margin for NQ. So, go to RTY if you have a smaller account or you don't like a lot of rapid movement, go to RTY. And I would favor that over ES. RTY is the mini Russell. That's a good one. Second best one, second best trending one underneath the NQ, which is the best trending one. But it can be a little fast, and a little high margin for some brokers. So, if that's not your game, great. Second choice, RTY, if you're a day trader. And it's the same rules, colors, dots, triple confirmation. We're going to buy it. We're going to go short. No trade zone there. So, we're going to go short right there. We're going to buy it right here. We're just looking for the first time you've got that triple agreement or triple confirmation. I can say, well, where do I put my stop? Well, you want to put your stop. Ideally, you want to put it above the dots, but that's a lot of risk for some people. So just put it a little bit above the top of the red bar when we're going short, or a little bit below the, a point or two is fine, below the bottom of the blue bar when we're buying it. And you say, okay, when do I get out? Well, you want to get out after you're in profit. Stop, same rule, second higher row of red dots. As it's coming down, second higher row of red dots. Now, if you're in profit of at least 10 points on NQ, I'm just using NQ here. If you're in profit of at least 10 points, then we're going to use the 2 green bars, but only unless we're in profit of at least 10 points. Here's 2 greens, because we're in profit of about 15 points right here. There's 2 greens. You put your stop 1 point above. We're out right there. All right, that worked out, okay? Picked up about 15 points. Okay, here's a really nice trade. Triple confirmation. Stop goes 1 point above. Down it goes. We got a big profit on this one. There's our 2 greens. Put the stop 2 points above. We're stopped out right there. If we're out at 36.35, we're short at 6.65. That's 30 points. That's a $600 winning trade right there. That able trend gave to you, me, and everybody who used it in 10 minutes. 10 minutes, $600. That's a nice trade right there. That's pretty sweet. Zach saying, oh, stop using the tick chart many months ago. You can still use it. Nothing wrong with that. I'm making it simpler, Zach. Just making it easier. Don't need the tick chart. Don't really need it. This is just working so well right now. Just keep it, as I keep repeating, less is more. Less charts, less indicators. Nothing wrong with using it. You can certainly still use it. I haven't used it probably about 6 months because it's just working so well like this. I want less charts and less indicators and keep it simpler, because simpler usually means more money in our pockets. So that's the only reason. Just it's working so well, not needed. A lot of people found that to be a little complicated. Too many charts, too much going on, and they just weren't trade savvy enough to handle it. And that's okay. Nothing wrong with that at all. Real nice buy signal. This was the big winner. Okay, we had the 30-point winner, which was 600 here. Small winner, let's call that a break even over there. Actually, a losing trade to start. Right here, well, it was about a break even. Yeah, actually, it was a break even because we're in right there, triple confirmation, and we're out right there, second lower row of blue dots. Actually, exactly even. We did have a losing trade. Oh, here it is, losing trade right here. I'll be fair about it. I show all the trades. I don't cherry pick. We put the stop a point above the top of the red bar, and we lost 10 points on that trade right there. So break even, minus 10. Actually, this is a winner right here of 15 points. So let's call it we're even at this point, even though we're plus 5. Let's call it even, and then 30 points right here. So we're plus 30 going into this trade right here. And that's including commissions and slippage, because I always like to exaggerate the losses and not the opposite, like everybody tries to fool people and do. I don't do that. This is about real stuff. Very serious about what I do here. Take this extremely serious. Okay, so we're long over here at about 675, and this was just a mega home run. This thing just took off like a rocket. Now, here's 2 greens, and we'd be stopped out there. Once you get stopped out, get back in on a sweet spot. If you're stopped out, get back in on a sweet spot. On the buy signals. I wouldn't take the sweet spot for the sell signals, only because, again, the buy signals are so much stronger and more powerful and long, than the sell signals. We got a sweet spot right there. Blue bar, blue dot, blue 1 minute buy signal, blue 2 minute, blue 3 minute buy signal. And that was only about a break even on the sweet spot. A nice little trade right here, from here to here. From here to here, that's 20 points. It's another 400. Now let's even call it 300. Let's take 100 off just for the heck of it. We were up 600 going into the trade. Another 300 is plus 900. And it got a little choppy, but keep in mind, it gets a little choppy around lunchtime, 12:30 to 1:30 Eastern. Definitely got a little choppy when we gave some back. Well, that's trading. Nobody knows what's going to happen before it happens. If it was that easy, we'd never lose. There's a triple confirmation on sell signal. Stop goes 1 point above. And we've got another one right here and another one right there. And the stop's going to go 1 point above, and we lost on those 3. Sell signals are tough because the market's in such a powerful uptrend. Buy signal comes in later toward the end of the day, and we get a 2 green bar stop. Let's call it, actually we get out at 4 o'clock Eastern, and maybe we make like 5 points on that trade. Let's not even count that. It's the end of the day, even though it was a winning trade. So, worked out real well. Really good morning. Gave back probably about half our money toward the end of the day, but still a winning day. That's what counts. Just have to be very disciplined. Now, if you like to do more of a scalp, I love the scalp trade, especially for somebody new. This is what I recommend. You have to have a pretty strong stomach to stay in the trades on the trend trading chart. Yesterday was a fantastic day, huge winning day on the trend trading chart. But you just don't know. Every day's different. So you got to have a real good mentality about it. If not, if you're more of a I'm lower risk. I just want to get in and out, hit and run. Great. This is the scalp chart. Perfect chart for that. Absolutely perfect for that. I recommend this for new traders or those who don't have a high risk tolerance, seeing their account go up and down every minute of the day. Some people like that. They go for the home runs. You'll make more money on the trend trading chart. You just have a lot more risk. But this is a lot simpler. You don't have to worry about double time frames. You don't have to worry about colors agreeing. It's such a simple chart. Every time the price hits a red dot, as long as it closes under that red dot, but not more than within 8 points of that red dot, because the stop loss goes 2 points above the dot. So as long as it closes within 8 points, it's a trade. That's all. That's the only criteria. First trade of the day, we lost. Okay, we lost 5 points on that trade. No trade in here, no trade in here. Here it hits the arrow, or in the middle of the arrow, it's the same thing. Closes under it, we won on that trade. So loser, then a winner. This is also a trade. It's got the big dot and the arrow. 1 minute later, we won $100. That was a winner, 5 points. This one closes slightly under the blue dot, no trade. Even if it closes right on the dot, no trade. Okay, so we got one loser, one winner, another winner, and then we had a loser in here. No, actually, that was a winner. We had a winner there, and it went up 6 points. So once it hits the 5 point target, we're in a winner. Hit the arrow and the dot. This is perfect. That's a double good one there. And 1 minute later, it went down 20 points, but our target is just 5 points. So every time we get 5 points, we win $100. This one hits the dot, and it turned out to be a winner, but no trade. So why not? It's a winning trade. You're not counting it? No, I'm not counting it as a winner. It was more than 8 points away from the dot. If we'd have lost like 15 points on that trade, 12 points on that trade. No way. Just don't take it. Be selective. 20 trades a day. No reason to push it. This is a losing trade. Hits the arrow, closes under the arrow, turned around and went 2 points above the arrow. We lost 7 on that trade. Still winning for the day, but that's how we do it. We keep it simple. Okay, let's do this as if we're looking at this live. This might be helpful. Okay, you got red and blue together there, so no trade. So we're just looking for the next time it hits a red or blue dot or red or blue arrow. So if you're looking at this live, this is what you're looking for. Okay, I want to see it come up and hit that red dot. That'd be perfect. As I'm watching this live, I'm just speeding it up. But these are the exact same signals you see at this time of the day. There's no cheating. There's no switching signals because we wait for the bar to close. And it never changes once it closes. So this is exactly what you saw. You can't say, oh, well, you're looking at it afterwards. You know the result. Doesn't matter. This is exactly what you saw at that time. Exactly the same. No cheating going on. We didn't last 25 years cheating people. Right there's a trade. Hits the red dot. This is perfect. Closes just under the little red dot. Stop loss goes 2 points above. So only got 3 points at risk. Doesn't hit it. We only want 1 point above. Winner 5 points, $100. Another trade right here. Hit the red dot. Closed under it. We lost 5 on that one. That's all we do. Hits the blue dot. Closes above it right there. Did that go 2 points under? Let's see. That's close. It did. We lost on that trade. Okay, no trade. No trade. Oh, there's a trade. Let's see what happens. That one we lost. So it was a little bit of a rocky start this morning. It was only like a break-even trade this morning. Keep watching because it gets good. We went on a serious tear. It's a quarter of a point away. We count that. Easy winner right there, 5 points. Okay, so we're winning a little bit, but let's even call it break even, because I always like to err on the really cautious. And I like to exaggerate the losses, not the winners. Like, that's the wrong way to do it. Okay, no trades in here. They all closed above the red dots. It got crazy good. Oh boy, it got really, really good. Okay, hits the arrow. By the way, that hit the arrow. That's a trade. And I'm going to count that as a loser because it went 2 points above. That's a winner. Hit the blue dot, went 5 points above. That's a trade. Oh no, I'm sorry, we don't have the arrow. That is not a trade. Okay, we're rolling right along. There we go. This one goes under the blue dot. That's above it. So hits the blue dot, closes above it. 1 minute later, we got our 5 points winner. Okay, we hit about 8. Watch this. 1 winner, 2 winners, 3 winner, 4 winner, 5 in a row. Okay, hit the dot. A couple of minutes later, got our 5 points. 5 in a row is 500. Every time we win is $100. 6 in a row, winner. Hit the blue dot, shot up like a rocket. 7 in a row, hit the blue dot, shot up right after that. 7 in a row, 700. Losing trade right there. 7 out of 8. There's another one right there. 1 minute later, winner. 8 out of 9. Another winner. 9 out of 10. Out of the last 10 trades, we had 9 winners. That's 900. 1 loser is 100. We were plus 800 in this. It's about a 2-hour period. It was just insane. And we were winning a little bit, but I call that break even going into that period. And we just crushed it. Is this 5 points? Let's see. From here to the top of there, eventually we hit our 5 points. Yes. Hit the red dot, went down another 5 points. That's 11 out of 12. That's $1,000. You could take this trade. I wouldn't. Why? Because your stop goes a point above the red dot. Too much risk. Yeah, that's a winning trade. Not going to count it. Too much risk. Well, we had a run right there. We hit 11 out of 12 for plus 1,000 in about a 2-hour period. That's nice. And it was real clear cut, real simple, nothing fancy. Hit the red dot, hit the blue dot, or same thing with the arrows. It just went on a serious tear. But then we had a losing trade right here. So you get the picture. It worked out really well, obviously. Nice day today. So that's how we do it. Keep it simple. Do anything I can for you. Thanks for being here. Just keep it simple. Let me, if you've never had a one-on-one trading session and you're on a trial right now, I'll gladly do that because I'll show you more in 15 minutes than you can do on your own for the whole month. And you only get 1 trial per client. So, we've got that big holiday sale going on now. Always glad to help and lower the price. Hope this was helpful for everyone. Stay safe. Thanks for being here. Have a good night. And we'll see you next week. Same time as today, next week. Merry Christmas, everyone.